Hello, hello. Going live at a different time today. I'm going to go ahead and, as always, check on the group, make sure that I'm actually live. Let's make sure we've got some volume. Yes, we do. As you guys know, I stopped making content in about February of this year, so the algorithm is literally destroying my life. So there haven't been a lot of people on these lives, but I'm going to keep at it, and hopefully Facebook will start showing my notifications to you. If you can, turn on the notifications from the group so that you can stay in the loop as to when I'm doing these live trainings. But we're only about 3 to 4 weeks in. I think this might be week 4. So hopefully the algorithm starts to pick up. We've definitely had a lot more engagement on the Facebook group. The more engagement we have, the more Facebook is going to show my content to you guys. So we are currently streaming live into my private Facebook group, The Profit Factor, also onto my business page and onto my YouTube channel. Now, for those of you who are new here, my name is Danae Wolf. I'm a financial clarity coach and a profit strategist. So what that means is I help entrepreneurs understand the money side of their business. I know the part that nobody likes to talk about or deal with, but I help you understand the money side of your business so that you can use that data and information to make operational improvements in your business. Now, if you are here, go ahead and say hello. You do have to grant StreamYard permission to see your name. This way I can actually see who's on here. Otherwise, it'll just say like Facebook user or YouTube viewer. I won't actually be able to see your name. Looks like there's only about 2 people here, which is crazy because when I was really making a lot of content, we would have dozens of people on these lives. But like I said, over the next couple of weeks, we should start to see the algorithm pick up and we'll be able to get more of you live, because when you guys show up live, I am able to answer your questions. I mean, I used to spend like 45 minutes just answering questions. So hopefully we'll be able to get live attendees soon. So today we are talking about a topic that I think a lot of times gets under people's skin. Today, the topic is why I want you to pay a lot of taxes. And I literally have already started getting Facebook messages from you guys. We posted about this topic on Monday. And I've already been getting messages from people saying, wait, I don't want to pay taxes. I don't want to pay taxes. So this was a live training I've been really excited to do because I really want to explain why I have that viewpoint and where I'm coming from with it. And before we get into it, I do want to be very, very specific, because some of the messages that I got were, well, there's legal ways to not pay taxes. Yes, we know there are legal ways to avoid taxes. And we will talk about that at the end of this training. So I am not saying the legal ways are bad. All right. So let's get into this training. So here is the truth bomb that I want you guys to understand. Profitable businesses pay taxes. All right. So when we hear an entrepreneur say, I got a tax refund, all right, and I think a lot of times they are saying it as a badge of honor. All right. They're like, oh, I got a refund. I got thousands of dollars back. Here's what's happening. As a business owner, when you are going around town, so to speak, bragging that you received a tax refund, what you are essentially telling the world is that you made no money last year. And I want to actually put that in quotes. You made no money last year, because what I mean by that is on paper, you made no money. So we're going to go back and reference the PPP, all right, which I'm sure we all have PTSD from dealing with all of that last year. But if you guys remember, there were a lot of you who were not able to get a PPP loan. Why was that? It's because on paper, you didn't make any money. You had been telling the IRS for years that you were not getting paid from your business. You were telling the IRS that you did not have a profitable business. Well, as an entrepreneur, we get paid from the profits in our company. Essentially, you could think, if you, let's go back to putting our employee hat on, right? When you had a job, your profit of your company would essentially be your gross paycheck if you were a regular employee, right? So the idea is our profit is the gross paycheck. We would pay taxes. And then the net paycheck is what you could put in your personal bank account, right? That's essentially, in its most simplistic terms, how it works. Now, there's all kinds of different variables here, right? We've got S corps, we've got all kinds of things, but in its most simplistic form, your business's profit is your gross paycheck you set aside for taxes, and then the net is what you can take home to your family and spend. What happens is, as entrepreneurs, we get it in our mind that we need deductions, we need write-offs, and we just spend because the thought process is, I'm just going to buy a bunch of crap and avoid taxes. But that's not actually how it works. And what happens is, let's say your profit for the month was $1,000. You don't want to pay taxes, so you go out and buy $1,000 worth of crap, right? You buy a bunch of things, and now you're like, great, I didn't have to pay taxes. Well, what we've now told the government is that you didn't make any money last month, right? You didn't make $1,000. You had no profit at all. So on paper, you are broke. All right. So what that means is, when you want to buy a house, you want to go buy a car, your paper trail shows you have no income. It shows that you are not making any money. And like I said, this really showed up and became apparent during PPP. I mean, I can tell you that there were dozens of PPPs that I did with people who I knew were bringing home way over 6 figures a year. And they were getting approved for PPPs that were like $4,000, $5,000. And if, just to bring you back a little history lesson, if you were a 6-figure earner, you got maxed out on the PPP with $20,000, about $20,000. And there were people who I know, you're bringing 100 grand into your household, but yet you can't get the PPP for 20K. Well, why is that? It's because you're lying on your taxes. And I want to be really clear with what I'm saying here. I'm specifically talking about lying and doing fraudulent things. All right. Remember, I'm very aware that there are legal ways to avoid paying taxes. And we're going to talk about that at the end. But right now, I am talking about this idea of entrepreneurs chasing down the write-offs, chasing down the deductions, which basically means you are just out there swiping that business debit card, doing whatever you can to avoid taxes. And you've got it in your mind that you are just going to spend out of your business in order to make sure you don't pay taxes. And somehow we end up with this idea that the goal is to avoid paying taxes. Well, the goal is to make money. And when you make money, you pay taxes. Again, hashtag disclaimer, there are legal ways to lower your tax bill, and we're going to talk about that. So when you are in a situation where you are basically saying all of these things are write-offs, right? I have people who we go through and we look at their P&L, right? We look at your profit and loss, and it's like, okay, well, your company made $80,000 last year. Oh, no. Give me a second. Let me go look at my other stuff. They get off the phone with us, and next thing you know, they miraculously find another $70,000 of expenses. Guys, that's tax evasion. All right. And tax evasion is bad. When you are combing through any receipt you have, your personal credit cards, your personal bank account, and you are literally just combing through those statements going, what can I say was a business expense? What can I say was a business expense? You're doing this to chase down lowering taxes, right? Because again, our focus on is how do I avoid paying taxes as opposed to how do I make money? So now you go through, and I know you guys are sitting here going, yep, that's me. Yep, that's me, right? At the end of the year, you're told, hey, your business profit was X. And you're like, nope, I can reduce that. And you go back and comb through those credit card statements, comb through those bank statements, and you're like, oh, I just found thousands of dollars worth of business deductions, right? Now, listen, some of those might be legitimate. You might be like, oh, I didn't remember my business credit card. I was at Staples. I had to buy some office supplies and I used my personal card, right? That's a legitimate business expense. But when you're combing through your personal credit card statement and you're like, oh, I bought a TV. I'm going to say that I bought that TV that was really for my bedroom at home. I'm going to say I bought it for the office at work. Okay. That's specifically what I'm talking about, right? That is tax evasion. That is when we are telling the government that items or services we paid for were business expenses when in actuality they are not. So there's two issues with this. Number one, it's tax evasion, which is bad, which is illegal. Okay. Number two, you are telling the government that you are broke, which lowers your borrowing power. Okay. This is exactly what we saw play out with the PPP. Those of you that I know are bringing home six figures couldn't get a PPP for 20 grand because on paper, you are not a six-figure earner because you have lied to the government. You have told them that certain items and services you've paid for are for your business when in actuality, they are for you. If you are trying to write off your groceries, that is not a business expense, right? But this is the kind of stuff that happens. So we're lying, which is illegal, right? Because we're committing tax evasion. But then we're also making ourselves look broke on paper, which is really going to be a challenge when you try to get a mortgage, when you try to purchase a vehicle, right? This is what happens because we are now producing these tax returns that show that the business isn't making money. Now, I've also seen this play out when somebody goes to sell their business. So, and guys, please do not hop in the comments and say that you do this, right? I'm not looking for anybody to incriminate themselves. We all know as entrepreneurs that this happens, okay? I happen to have a front row seat to it because of the business that I'm in, but we know that everybody's searching for the deductions and everybody is looking for the write-offs. And another area where I've seen this really come to bite an entrepreneur in the butt is when you go to sell your company, right? So you might be a business owner who is doing a couple of shady things, right? You might be saying that certain things are business expenses when they're not, right? You go to Vegas with your husband and all of a sudden that was a business trip. You know, damn Skippy, that wasn't a business trip, right? But you're telling the IRS it is. And now you have reduced your taxable income by thousands of dollars because you put this entire weekend getaway on the business debit card and you've falsified the records by saying you were there for business when in actuality, you and your husband maybe chatted about your business for 10 minutes. So it was not a business trip. It was a personal trip, right? But we've written it off saying that it was a business expense. So we've now made the business look less profitable on paper. But when you go to sell the business, right, you are trying to make the business enticing to the buyer. So you're telling the buyer all about this amazing lifestyle you have with your company because you know that you just went to Vegas and spent thousands of dollars for the weekend and it was because your business is making a lot of money and you were able to do it. So now you're telling the new buyer about all this money you make. And what do you think the buyer does? They say, okay, great. I want to see your financial records. Well, on your P&L, it's not going to show that you had a big profit and then that was what you took and went to Vegas. No, it's going to show you had a huge expense for some type of event that you had to travel for and the business wasn't profitable that month. So now the buyer is going to say, on paper, this business business isn't profitable, so why should I pay you that much for it? And I think that's a component that a lot of business owners don't consider, right? What is your exit plan with your business? If you are continually bleeding your business dry, right? And you guys know if you're doing this, you know if this is your approach to tax strategy, right? If your approach is I bleed the business dry, I spend every penny so I can avoid taxes, you really need to consider the fact that you're not going to be able to sell your business because on paper, your business isn't profitable and people purchase profitable businesses. So that can really be a challenge if your exit strategy is to sell the business. Now, some of you might say, listen, my exit strategy is to just close down the business. I'm never looking to sell it, right? If that's your situation, okay, that's fine. But then you want to come back to think about the legal end of it, right? Are you really falsifying records and saying that something that was personal was a business expense? You don't want to do that, right? There's no ifs, ands, or buts about that. I'm never going to teach you how to strategize and do that. I don't know. We don't do anything illegal. But maybe you really are someone who just wants to keep reinvesting in their business, right? You don't want to spend money out of your business. You don't want to take out profits. You want to put them right back in because maybe you're really trying to invest in different equipment, or maybe you are doing some research and development and you're trying to launch an app, or whatever your case may be. You might have a situation where you're like, well, my business isn't going to be profitable because I am taking those profits and pumping them directly back into the business. Guys, that's legal. That's fine, right? I'm specifically talking about those of you who are saying, I made a lot of money in my business this year. I'm going to go to Vegas and drop 10 grand this weekend and say that I was there for a business conference, right? So now you might really go to a business conference in Vegas. Again, I am saying those of you who are specifically lying, those of you who know that you went out and bought a Lexus for your wife, and now you're saying it was a work vehicle you used for an employee, right? We don't want to do those things, all right? I don't want you to go out and just buy a bunch of shit to avoid paying taxes. That's not how it works. And what we see in December, all the time, what we see in December is people running out, swiping that credit card, going, I need write-offs, I need write-offs, I need write-offs. Well, this video is not, a full-fledged how taxes work, but I'll just give you a little quick dive into it. So you're going to owe taxes based on whatever your federal rate is, right? And you guys can easily Google what are the 2021 federal income tax brackets, right? So let's say it's 25%, right? Then you owe whatever your state is, which is usually about anywhere from 3 to 5%, right? So you combine those two numbers, and that is the percentage that you would owe in taxes. So if your business's profit is $1,000 for the month, you're going to owe whatever your federal rate is plus whatever your state rate is, right? So let's just say it's 30% when you combine the two. So let's say you run out and you just buy a bunch of shit, right? You buy a bunch of shit because you want to reduce your taxes, right? So the idea that entrepreneurs have in their head is you hear that you owe $5,000 in taxes. So you're like, screw it. I'm just going to go out and buy $5,000 worth of things. That's not how the math works. All right. So what'll really happen is you're going to go out and you're going to spend $5,000 worth of things, but really on the items you purchased, you really only got about a 30% discount. That's really the best way to think about it. Whatever you purchased, you got whatever your taxable rate is, right? And in this example, I'm just saying 30%. That's what you got off of the items you purchased. So you only paid 70% of it. That's essentially how it actually breaks down on paper. But you still have that $5,000 tax bill. You barely put a dent in reducing it. And that's what a lot of people don't understand. It's not this dollar for dollar exchange where your CPA can tell you have a $5,000 tax bill and you just go out and buy $5,000 worth of crap at Staples, say it was office supplies, and now you think you miraculously don't owe it. Doesn't work that way. You really only got a 30% discount on the items that you purchased, and you're still going to have a pretty large tax bill. Now, the other thing that I want to warn you guys of, it's kind of hard to go to Staples and spend $5,000, right? So that's not typically what we see. What we actually see is people run out and buy large ticket items, right? So we're seeing people go out and buy a car, all right? We're seeing people go out and buy a ton of computer equipment, right? Those items, and again, this is not a full-blown tax lesson, right? And I have videos on this, so I'll link it at the bottom from previous trainings I've done. But when you go out and buy those, let's just call it high ticket items, right? They're technically called fixed assets, but those actually don't get expensed all at one time. So I shit you not, this is a real example. I've been in a situation before with somebody who came to me who is like, I need to leave my accountant. I said, well, why do you want to leave? Why do you want to switch? And they said, well, they told me that I had a $40,000 tax bill. I said, okay. And they said, yeah, but then I went out and spent $40,000 on a car and they're telling me I still have a tax bill. Yeah, because that's not how it works. All right. So what happens is when you buy these high ticket items, they have to be what's called depreciated. So you might have spent $40,000 cash, but you don't get that $40,000 deduction all up front. We take the deduction little by little over, say, 10 years, depending on what you purchased, the amount of time is different, but you basically get a little deduction each year. You don't get to write off the full amount that you spent. And this is where people get in trouble because now you've reduced your cash by 40 grand, right? Because you went out and paid cash for this car, thinking instead of paying Uncle Sam, I'm going to pay the car dealership and get myself a new car because I got to spend the money anyways. I might as well spend it on a fancy new car. No, girl, that's not what happened. Uncle Sam is too smart to let that happen. Okay, so now you have $40,000 less in the bank and your ass still has that big tax bill. Okay, so we have to be smart about this. When you are trying to do something shady, just I believe in karma and cosmic flow and everything like that, it's probably not going to work out for you. And if it does, you're a ticking time bomb until you eventually get caught on it, right? We don't want to do stuff like that. We want to do it the right way because again, tax evasion is bad and illegal, and you're going to make the world think that you are broke on paper. So please do not be chasing the idea of, I don't want to be taxes. I don't want to pay taxes. Chase the idea of, I want to make a lot of money. Okay. So I want you to first change that. I want your business to be profitable. When we look at our P&L, we want that net income line. Okay. Your net income on your profit and loss is your profit. We want that to be as high as possible. And yes, that is your taxable income. That is the line on the P&L that you are going to owe taxes on. But there are legal ways to lower what you pay in taxes, okay? Because when we do it the right way, when we do it the legal way, we're now able to sell our businesses, right? Because we are still going to be showing operationally, okay? Operationally, our business is very profitable. So we're going to show, here's our revenue, right? Here are our expenses. Here's what it costs to run the company. And here's what my profit was. And then we're going to have a paper trail of here's how I invested it and what I did with that profit to lower my taxable income. But we're still very much showing the government or an interested buyer that operationally, our business is very, very successful. And now what we've done is we are really able to make sure that we look good on paper, right? There are too many of you guys, and I'm like, listen, I see let's just judge a book by its cover here for a second. When I see the clothes you wear, the purse you buy, the boats you're buying, the homes you're buying, pretty sure you're not making 30 grand a year. So when I get into your tax return and that's what I see, we know something fishy is going on. All right. So what you want to do is make sure your business is profitable. And then I want you to look at the legal ways to invest this money. Now, my number one favorite thing that I believe entrepreneurs really overlook is we tend to really focus on today, which I know some of us is just like we feel like we're keeping our head above water, right? So we tend to be very focused on today and we don't plan for tomorrow as well as we should. So what I really love to see you guys do is invest into retirement. Because when you are investing into retirement, guys, you're investing into yourself. You're basically setting aside money today for yourself tomorrow. That money goes back to you. And the government incentivizes you to do that. And I think a lot of times there is this misconception in the entrepreneurial community that when you're self-employed, there's not an opportunity for retirement, because I think we're just used to that being something our employer covers. There are amazing opportunities to invest in your retirement as an entrepreneur. It will save you a ton in taxes. Okay. Now, this live is not about that, right? And I do have a partnership going with someone who's putting together an amazing presentation for you guys to teach you more about investments for your retirement. But that is a responsible way to do it, right? There are R&D tax sheltering opportunities. And again, we don't want to look at this in a way of, how can I beat the system, right? If you guys are looking to do something as a way to beat the system, I'm not your girl, okay? I'm not here. I'm not here for it. That's not my thing. I am talking about what are smart legal ways that we are able to lower our taxable income, okay? So lesson one to take from here, be profitable. Don't take the approach of, I'm going to bleed my company dry and make sure that I look broke on paper. No, don't do that. Be as profitable as possible. Then take those profits and make smart decisions that legally allow you to lower your taxable income. And my favorite is investing into retirement, right? I think that that is something that every entrepreneur should do. And I think that it's really not done enough. So I'm going to get off my soapbox now because I'm sure you guys have probably heard stuff like this before. And I know it's a touchy subject. Nobody wants to pay taxes, but I'm just tired of hearing entrepreneurs talk about getting tax refunds like it's a badge of honor. You just announced to, the cocktail party that you didn't make any money last year. And if we see the lifestyle you're living, we know that you made money last year. So you basically just announced to a room at a party that you committed tax evasion. So let's not do that. Let's not do that. Let's be responsible. We are in business to make money. So let's be profitable. And then let's make smart decisions with those profits. There are plenty of people that you can work with, such as your tax preparer, to say, what is legal, and let's have a tax strategy session. And make sure when you meet with your CPA that they know that's the service you're looking for, that you're looking to say, hey, I typically have $150,000 in profits in my business. What are smart decisions I can make that will lower my taxable income? That's really the conversation that I hope you guys start to have, as opposed to what happens now, which is you guys go out and just buy a lot of crap. And that's how you make your companies look broke on paper. And that's what I want you guys to stop. All right, let's dive into some questions. So, Cassandra says I cannot. Okay, Facebook user, sorry, I don't have, you did not grant me permission. So I don't know what your name is, but I'll see if I can tell on Facebook. But you said, at what point do we let someone take over our taxes, getting a CPA and whatnot? Yes. So I really don't like anyone who has a business. I don't like any business owners doing their taxes themselves. I think just a lot of mistakes can happen, and you could even end up paying too much in taxes, right? If you don't know how to sort of organize all the financials, get them together, and file properly. So if you've got a business, which if you're on this page, you have a business, I would really like to see you working with someone right away. Unless you know that's in your wheelhouse and you know what you're doing, but chances are you don't. So I would be working with a tax preparer from day one, especially because you want to make sure you're set up for success. There are a lot of businesses that I see who have elected S corp, and it's a really bad decision for them. Not that what today's training is, but definitely see a lot of misuse of that. So I would make sure that you meet with someone from day one. Oh, Kayla, hi. Okay, someone said, are you still taking on clients? Yes, we are. We have just expanded our team, so we are most definitely taking on clients. We probably have about 4 slots open right now. It was 5, but we just had somebody come on board. So we have about 4 slots open right now for our monthly clients. So go ahead and shoot me a PM. I would love to talk to you about that. So looks like we cleared out some questions. This is awesome. I think this is like the first live. Like I said, guys, I haven't been going live since February, and I just started up again. And I think this is week 3 or week 4, and this is the first time we're getting questions, which is good, which means you guys are interacting. The more we interact and engage with each other, the better the algorithm will do. And when the algorithm is good, that means Facebook will actually show you what I post. So when I'm creating this content, when I'm posting my blog, when I'm posting my podcast, Facebook will actually show you that, so you guys can sort of stay in the loop with what I'm doing. And we've definitely seen that the live videos, the engagement is way lower than what it was last year, just because I took so much time off. But I will tell you what, podcast is doing really well, which is interesting because last year the podcast was not doing well, but the live videos were doing really well. And now it's completely reversed. So I don't know, but that's where we are. But I will keep showing up here every week. Hopefully I will not be taking any more time off of content creation, because I love this. I love when you guys ask me questions and we can interact and build community and figure out all of this stuff together. It just really lights me up. So send me a message if you are interested, definitely taking on new clients, and I would love to chat with you. I'll talk to you guys later. Everybody have a great day.